What's up guys, Brian here. Remember me? I used to make videos here. Well, if you don't remember me, go back to my channel, and the last video that I created was called Cutting Out Early. A few months ago, I said I was going to be scaling into stablecoin pairings. There was a lot of concerning things that I noticed this time around in this cycle. And this is a video that I don't want to make, but I am 70% sure that this run is over and we're going to long tail out and the blow off is here. Unfortunately, like I said, I didn't want to make this video. My price predictions mainly came true except for one important one, but I kind of understood the reason why it didn't get there. My Bitcoin prediction was $80,000 this cycle, and my Dogecoin, like when everything really surged, I was saying 15 cents to 25 cents. It blew through that. Obviously, extreme parabolic move there. I was saying with Cardano, I was seeing like, $1 to $2, kind of thing. It got past that. Ethereum, I said $4,000. Look back on my channel and click on the one that says $93,000 question mark and it has the Ethereum logo. I said in that video, Ethereum $4,000, not this BitBoy stuff of 27,000, 100,000, blah, 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 all this kind of stuff. So my predictions are pretty conservative, and it maybe kind of limits me from hitting the top, but it also mitigates my risk from some of these large falls and stuff like that. Now, when will I be buying back in? And what are my reasons for thinking that this is 70% sure that this is over? And I'm leaving that 30% chance that we hit a higher high later in the year. We go back to the levels that we saw earlier, a couple months ago, or potentially even go past it. Now, we have to talk about how that can occur and why I think that there's a 70% chance that this run is over. So what happened in the 2013 boom and bust cycle? So you have this overexuberance and the replication and the cloning of coins that aren't going to really add any kind of technical benefit or little to no benefit. And this dilutes from kind of the focus or the original coins. And what did we have in 2013? We had the country coins. We had Aurora coin, Spain coin, Greece coin, blah, 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 this kind of stuff. That was a trend. And then we also had the Litecoin clones. And the one that survived was Dogecoin. Now, was Dogecoin a technical improvement over Litecoin? Yes, faster block times. And ultimately, in the future, it became merge mined with Litecoin and was able to leverage the hashing power of Litecoin. And Litecoin and Dogecoin kind of continued with that strength kind of going forward. But most coins fell to, the 9th, 10th, 11th page of CoinMarketCap. Now, what happened in the next cycle, 2017, 2018? We had ERC20 tokens that were not much more than a white paper and an ICO, initial coin offering, and just the overexuberance and the speculation and people chasing those. What was another thing we had? The Bitcoin forks, Bitcoin Cash, Bitcoin Diamond, Bitcoin Gold, so on and so forth, to an egregious amount to where it's like leveraging the brand, leveraging the credibility of a coin, but not really adding that much value. And it's just kind of a money grab kind of scenario. What did we have this time that happened? And it just started surging and surging and surging. Safe this, safe that, safe Moon, safe Mars, safe Uranus. We had all these knockoff dog tokens, Labradoodle Poodle Inu, little baby Doge Inu, kind of thing, like Shiba Inu. When the Shiba Inu coin got up there and was in whatever top 20 on CoinMarketCap, you start to have to wonder. You have a knockoff. Everybody's all mad about Dogecoin being up there and surging and being where it was. But then you have 1,000 knockoff dog tokens on bogged down blockchains. Every blockchain is bogged down. And I'd previously told you guys that before, where it's going to get to a point where at the peaks, you're not going to be able to move the Bitcoin. You're not going to be able to move the Ethereum. Every chain is bogged down. Even the Binance Smart Chain got bogged down. Polygon, Matic Polygon was bogged down, especially during the Titan toboggle just like a week ago or whatever. So the blockchains get to their technical limitation, they get bogged down, and then it's very limiting. That's a lot of friction. And then secondly, people start to take, profits. And then when there's not enough new people to kind of chase after it, and then there's a dilution, everything's getting diluted into all these little tokens and all this kind of stuff. I mean, there's over 10,000 projects listed on CoinMarketCap, most of which don't really provide any kind of technical improvement. So that's when you know that there's issues. So every single cycle, we have had the cloning and replication of things. Also, this cycle, we've had all these clone jobs of, Pancake Swap on the Binance Smart Chain and on Polygon. There's been a ton of rug pulls. It's very, very treacherous out there to know where to put your money, where is safe. And even though these weren't centralized Ponzi's like BitConnect that we saw, the last cycle, 2017, 2018, there was still the vulnerability that, things could go wrong, whether it was, meant to be that way by the developers, that it was going to go wrong, or whether that was just by happenstance and that there was a vulnerability that got exploited. It's really hard to say. Every situation was different, but there was a lot of them, and this continues to happen. And so obviously that really kind of wears people down. Now, what do we have this time that could create bigger falls and more egregious drops is the leveraging. The leveraging in crypto is unreal. So this time, let's say someone did a credit card convenience check, bought crypto with it, pulled that money in, and then they leveraged down on stuff like Compound, Venus, Aave, taking loans against loans against loans. It's just, so then what happens when this stuff falls and people have to cover their loan? They're going to try to sell the alts that they don't covet as much to try to pay off their loan so they don't get liquidated, to try to deleverage. They can't do it. They don't have enough money. They don't have any money in their bank account. Also, some of the unemployment benefits and some of these other COVID-related benefits, not only in the United States, but around the world, are likely coming to an end or have ended. So you have that as well. Also, the cost of everything around us has went up. Gas prices, food prices, lumber prices, all these things have increased. So it just costs more to live. And people want to get out. It's summertime. They want to enjoy going to the lake, getting out on some boats, going on a family vacation. Maybe they didn't get to take one last year. And so these digital coins that are replications of replications of replications maybe don't interest them as much, and they're not really talking about it as much, and as the tide goes out. So from a technical aspect, let's say and I'm not one of these chartologists and all these people that chart this stuff out, but I do look at it on a macro scale, the boom and bust cycles. And what do we have on most of these charts is a head and shoulders reversal. And I hate to even say it because I'm not this person charting stuff out, one of these chartologists. But when you can only sustain a parabolic run for so long, and the cookie cutter thing that happened in 2017, 2018 has happened to Bitcoin, where last time Bitcoin went up, it touched 20,000, and then it pulled back in this $14,000, $15,000 range. It popped around there for a while. There was a couple weeks in there where the alts surged. They surged. Same thing this time. We got to 64,000, pulled back, was showing some weakness, but then the alts were popping off. You got 1,000 ENU, little dog tokens. You got 1,000 safe this, safe that, moon this, moon that. And then poly this, poly that for all these, different platforms and everything on Polygon. And at some point, there's not enough money to sort of dilute down into all these little crevices and everything, and kind of support all the prices of all this stuff without tens of millions of people coming into this. And at the end of the day, it's like, well, what are they buying? And are they going to chase it at those price levels? The answer on Bitcoin, and this the critical error that some of the big money made, but that I did not make, because I knew that the price bias situation is very, very real. People want to have a lot of coins. With Dogecoin, you could do that. With Cardano, you could do that. You could also do that with XRP. That is one of the things that did protect XRP, because people were, upset obviously about the SEC lawsuit, and it did pump pretty hard, so, but as far as, do you think a teacher is going to like buy into Bitcoin when one coin is worth more than their yearly salary? No, they're not. They're going to buy Dogecoin. And that's what I told everybody. I said, hey, they're going to take their stimulus and they're going to buy Doge, because that's what was trending. It was trending on Twitter, trending on TikTok, going mega viral. All these, obviously, like billionaires talking about it, this and that. Now, that's a critical error that the big money made about Bitcoin, is that they were going to go for this greater fool theory. They did not buy in low enough. They didn't buy like when I was buying, like December of 2018 or December of 2019. They weren't buying their stuff then. They're buying when the run took off. And then they're thinking a greater fool theory that retail investors are going to come in and they're going to buy that upper channel, and then they're just going to dump on them. And then it didn't get near as high as they thought it would, because everybody has these price predictions of Bitcoin 100,000. My price prediction was 80. Did not get there. Now my $2 trillion prediction for the entire market cap, that hit. My prediction again for Cardano between $1 and $2, that hit. Ethereum at $4,000, that hit. Doge beyond 15 to 25 cents, that hit. All those hit. But again, the Bitcoin one did not hit. And that's the thing, is that you need to realize it doesn't matter that we didn't make it into the red part of a magic rainbow chart or this or that, or this stock to flow ratio stuff and this and that. It doesn't matter, because psychologically people felt like they already missed that. They felt like they even missed it last cycle, when stuff was at 10,000, 15,000, 20,000. I had one guy out in California, one of my friend's dads, he says, who's buying this stuff? How do people have that much money to buy this stuff? And yeah, so that was obviously going to be even more present when stuff was 30 grand, 40 grand, 50 grand, 60 grand. And we're still elevated. The last two crashes, things have went down 85%. If Bitcoin went down 85% from its peak, it'd be at 9,600. I don't think we're going to get there. I think anything under 25, and let's talk a little bit about prices and what I'm thinking. Because again, I was in stablecoin pairs. I've been staking stable coins, mainly playing that game. I still have obviously little Mars boots on, getting ready just in case there was some crazy black swan event and took us back up. But something has to happen to take us back up, and it has to be on a massive scale. It has to be a lot of money, has to flow to that. And from a technical pattern, sophisticated buyers aren't going to buy at this level. Guys like me are not buying at this level. You have to understand that guys like Michael Saylor, he's buying all this Bitcoin with debt and all this kind of stuff. He has a lot of money, but he's not smart money. You have to understand he's a noob. I'm not buying at these levels. I'm not a noob, So now that might seem a little bit egotistical, but I'm going to tell you why I'm not buying at this level. You can't, just like when something can't sustain itself in a pure parabolic run, it cannot sustain itself indefinitely. It's going to have to, consolidate. It's going to bounce around at some point. It's going to pull back and it's going to bounce around and stuff like that. And it's going to kind of find its way from there. Same thing when you're going down. It's just not going to typically go down and create a V shape when we've went over 50% drop and create just a complete V reversal and go straight back up and go to an all-time new high, when it's going to take, tens of billions, hundreds of billions of dollars. You have to understand, in 2013, people are trying to play out this whole scenario where we could have a double peak. Why was the double peak created in 2013? So in March of 2013, Cyprus stole money from their citizens. They did the bail-in, and they took people's money out of their savings accounts, and they basically bailed themselves out with people's savings. And then people were like, screw this, and then that was like a huge case for Bitcoin. But you're talking that the whole market was less than about $5 billion at that time. And even by the end of 2013, when everything pumped real hard, it was like 60 or 70% of the trade volume was coming through Mt. Gox, and they had trading bots to try to make up the difference because they had already been hacked, they were insolvent, and they were trying to make up the difference. So it was this extra kind of like manipulated kind of pump that made it go up there. But even at the peak, the whole crypto market was only worth around $10 billion. We got to over $2 trillion. That's a lot more economic energy that would have to come in. Now, here's the critical error that a lot of people don't realize, and it's something that Michael Saylor didn't realize either. Every noob that gets into crypto thinks this thing is taking over. That's what I thought in 2013. That's what the people that got in 2017 thought. Oh, this thing is taking over. This is a global takeover. It's taking over. And that's what the people that have got in this time, that's what they're thinking. Oh, this is different now. This is different now. And it's like, well, how do you know? You weren't around in 2013. You weren't around in 2017. That's exactly what we thought. And that's what you thought too, didn't you? So Michael Saylor thought that. Oh, this is taking over. It is, but it's happening way slower. The development is happening way slower than you can think. And the kind of like proliferation through the world economies is happening way slower and way more in a volatile nature than people initially anticipate. They think it's just going to be this upward trajectory. It's going to be used and accepted everywhere. And when you see signs of like General Motors, like everybody's kind of like, it's really annoying to me because these different companies will say, you know, we're thinking about accepting it. That's so weak. You're thinking about accepting it. I mean, it's just garbage. That's like not even news, but they know that they'll get news from that. That really doesn't do any price support or anything like that. That's just almost like a talking point, and it's more kind of publicity for them. So when I started seeing kind of the news like that, or, you know, obviously Tesla, well, we're thinking about accepting Bitcoin again. If, you know, it becomes more, you know, basically zero environmental impact, which is the whole thing is silly. I mean, we could go on about that and the hydroelectric power that's being used or different things, different mining techniques, but that's neither here nor there. Very, very weak news. And then obviously the FUD, even though we know that the Chinese FUD is whatever, nobody cares kind of thing. It really hits the newbies because they haven't heard it before, but this has been FUD for 10 years. Every single time, oh, China's going to ban it. Uzbekistan is going to ban, you know, Bitcoin, this and that. But that being said, it does freak out like noobs. And when the tide has already went out and the trend is going down, then it just makes them clam up even more. And then people, they associate what they could have bought at the peak of their investment. And then as that erodes away very, very quickly, they become very, very worried. So the car that they were going to buy, whatever they were going to buy, the trip they were going to go on, all these kind of things, evaporates very, very quickly. They get scared, they panic. And then you have this continued like blow off, you know, situation. But we will have to plane out first before we go back up. I guarantee it. It's not just going to be some reversal and then boom, unless there's some kind of crazy black swan event that would happen. But which we've had some black swan events, but I don't know. I mean, again, I just don't really see that happen. I think we're going to bleed here for a couple months, and I'm looking for Bitcoin 25,000 and under, start to accumulate some, but I really think it's going to get down to around 18,000. I'm looking for Ethereum under 1,500, probably like less than 1,200, honestly. BNB under 200, Litecoin probably under about 80. You know, Doge, I wouldn't touch it, wouldn't reaccumulate until it's at 5 or less. I know that might be shocking here. I'm just telling you what my thoughts are, because when you've went up thousands and thousands of percent, you've got a lot of people in profit. They're going to try to take those profits and everything. So Cardano, that's kind of the same situation where it's went up so much that I'm not going to kind of touch it. But here's one of the other things that Michael Saylor and these other guys that don't understand the economics behind mining and what'll happen. Everything that can be earned will be sold, and that's pretty much every crypto. People have to pay for their hardware, they have to pay for their power. Now they're not profitable with this drop. Have to pay for those GPUs. If you're mining, let's say if you were doing DeFi, suddenly it's going to take you longer to break even on PancakeSwap. You got to sell the cake, you know, all these kind of things. So these are the things. 70% sure that it's over. 30% chance we do get to these points that we saw a couple months ago, or maybe even hit higher highs. What do you guys think? Follow me on all social media at Brian Phobos, YouTube, Instagram, Steemit, Twitter, Hive, everywhere. See you guys.